Well, the risk of leaving your taxes to the end is that you won't have all of your paperwork gathered up. In essence, you're working under the gun, right? So the most important thing is that you have all your slips for your deductions and your credits together so that you can file with them, as well as you have time to research anything new that might be available to you. There's lots of great new things out there this year, especially for families. And if you don't have time to look into them, you might miss that deduction. There's a tendency for people to think if they missed a T-slip, they can just put it in next year and claim it then. But that's not true. You must claim all of your income in the year it was earned, so that when the matching department goes to work in the summer, they don't find anything missing. And if they find something there, you'll be reassessed for the tax and then interest on that tax. The first time, that's all there is. But if that happens twice within 4 years, there's actually a penalty for not including all of your income. And that penalty is 10% federally and 10% provincially of the amount you didn't claim. So that's a steep penalty right off the bat, and then you're still going to pay the taxes and interest on that. In addition to making sure you have all your receipts for deductions and for credits, it's important that you know how to apply some of those credits. So for example, you can pool receipts, medical expenses. You can pool your whole family's medical expenses and apply them to one tax return to get the most benefit. Charitable donation receipts, they can also be pooled and saved up to 6 years. Public transit passes. So it's important that you know how to use your credits and apply them to the maximum advantage for your family on your tax return.